Welcome back. Today I'm going to share some continued analysis when it comes to Palantir's Q1 earnings release and its Q1 quarter. So kicking it off with the guidance that they provided, because I think this really is where the issues started to come into play. And what I'm about to talk about is not and should not be directed at the employees of Palantir and everyone there doing the hard work making this the great business that it is, but rather I'm talking about the performance, the earnings, the revenue, quarter over quarter, a bunch of stuff that doesn't really matter in the long run if you take a 5 to 10 year outlook, but stuff that definitely does matter in this environment. So with that said, there's some key insights that I think not a lot of people are getting. They say they're guiding for revenue in Q2 of 470 million. So that doesn't mean they're lowering it, because they never had guidance for Q2. They always put guidance out one quarter after earnings that they release. So that's the guidance for Q2. But the thing is, analysts, the company compiled consensus on bloomberg, FactSet, whatever you want to look at, was way above that 470, was closer to 486, I think I saw it at. Now, what's the issue here? Well, 470 million off of what they just did, which was 443, 470 over 440. So look, that's a nice 5% quarter over quarter increase. It looks like a nice bump quarter over quarter. However, we have some issues come into play when we look at what that compares to year over year. So Q2 1 year ago was about 375 million. So look, it's a 25% growth rate. And this is in the same place that they're talking about their long-term revenue growth will be 30+% for this year and the next 3 years. So it starts to be a little troubling. They're saying, this is our guidance. Our guidance is, first of all, below expectations, and also it's below our long-term growth rate goals of 30+%. How do they expect to meet and reach and exceed those goals for each year of 30%? Now, what's the answer? Well, I think Palantir, for the first time, might be having some difficulty in projecting what their revenue will be for the quarter. So what do I mean by this? Well, they talked about on the call how they don't want to put paperwork in front of actually getting a deal done or actually doing work for their clients. So it seems like they're doing and shifting even more work to the front end of their contracts with their customers. They're doing work before they reach a deal, before they sign a contract. They want to get things in motion in this type of environment where everyone needs help. So that's making it a little difficult even halfway through the quarter, because think about it. We're in mid-May. That's basically halfway through Q2. They already have a good idea of where they're going to be. So they cite a wide range of potential upside. This is also where I had a bit of an issue. So what does that mean? And also, why are you not factoring that in to your base case revenue? If there is potential upside, let's take account of that and raise our guidance. Because if they're not raising the guidance, that means, in my opinion, they're not actually very confident that that upside will come to pass. So a bit of some conflicting messaging here saying, this is our guidance, but trust us, there's more upside. And we'll get to the analyst questions in a moment, but it really seems like they did not convey that. So I'm not entirely sure what's going on. I don't entirely understand why this is such an issue, but the guidance was concerning. And just to expound upon that, we saw an adjusted operating margin figure of 20% for Q2 of 2022. Again, these are quarterly numbers. They don't matter in the long run, but what they do matter for is the trend. Now, if Palantir's growth is decreasing, that is a very important trend and likely why we've seen the stock fall off significantly. I'm expecting this to rebound. I think Q1 can be a little tough for government contracts, and we know they've got a heck of a lot coming, even if it's not this quarter, because that's what I'm saying is they're doing a lot of work. It doesn't necessarily matter if they log it all in Q2. What matters is if they eventually are able to recognize all of that revenue. But my point is the mixed messaging, I think, is what is contributing to some confusion. Confusion means uncertainty, uncertainty means risk, risk means downside in the stock market. And so the adjusted operating margin is markedly lower than what we had this quarter. So it doesn't make any sense. If they're investing in a lot of sales and marketing this quarter in Q2 to drive growth, why is growth lower? Why are they guiding for more expenses and less growth? It's pretty troubling to see these two, but once again, These two numbers do not dictate an investment thesis. They dictate more research needs to be done over the coming quarters to see what is happening there. Because you contrast that 20% with their full year expected operating margin of 27%. So first of all, I'm pretty confident that when they're able to say 27% while also saying next quarter they're going to do 20%, that this could still be a possibility, but they're really going to need some improvement in the latter half of the year to get up to that 27%. But once again, what is driving this 20% lower? They were not able to answer this on the conference call. And some other things, this really wasn't mentioned much in the videos that I've seen, is that it seems like Palantir potentially leading to some of this slower growth, although the slower growth is because of the government side and not really because of the commercial. But Alex Karp in his letter mentions this tension between a customer's understanding of their needs today and our view of what they will need tomorrow, in Palantir's words. They have a fundamental challenge. He's saying, we have an issue with our sales team. Our products are not selling as well as we want them to, think they should, anything like that. It's our instinctive pursuit of solving the hardest problems our customers face that sometimes causes us to undervalue what they need in the short term. So essentially, it's back to this whole conversation about thick versus thin products. Palantir wants to provide this very, very thick product, because this very, very thick and large product with everything in it, because they think they're the best at doing it. And very likely they are. But the actual fact of the matter is that clients commercially only need a small segment of that, and Palantir's pushing this whole thing. So when that happens, the clients just either get confused, don't think Palantir's right for them, and ultimately don't end up choosing Palantir, or something else happens. In this case, what Alex Karp is saying, it doesn't sound that things are going well with the sales team. So he says, we also see further opportunities to decompose our platforms so that an increasingly broad and diverse group of customers using our software have access to the specific component products they need from the start. So once again, that's what I'm saying in terms of breaking down the product to make it easier to sell, to make it easier for the sales teams to explain why they're providing value in the way that they are. So I wanted to point that out. I think that is very important. So now we're on to, this is the corrected transcript from FactSet, and it's of Palantir's Q1 quarter of the Q&A section. I just wanted to dive in here. This is where Dave Glazer, CFO of Palantir, actually talks about the company targeting to be GAAP profitable. So this was his answer. He says a negative 9% GAAP operating margin in Q1. So GAAP means that's how the company presents the figures, including stock-based compensation. So the entire business, this is how they did. They had a negative 9% GAAP operating margin, which was an improvement from last quarter of negative 14% and year over year of negative 33%. So enormous improvement year over year, and they're making significant progress. Q1 was their strongest GAAP quarter to date. So once they're able to get to 0 and beyond, that is when they are GAAP profitable. That is the profitability point. They are getting ever closer towards that. But this is the part where they start to lose me. Last year, for the full year, we posted $242 million in adjusted free cash flow with a 31% adjusted operating margin. When they say adjusted, it's essentially a term that removes the stock-based compensation. So it's not real in the sense that stock-based compensation is an expense that is expensed. Yes, it's not a cash expense, but it still counts. So adjusted means without stock-based compensation. They say they're already off to a strong start this year, but that said, he said they're preparing for a world that has the highest chance of nuclear war. I don't understand the link here. I don't know why he's bringing this up. This has nothing to do with their profitability, in my opinion, because he doesn't follow it up and explain that. For prepared remarks, because Palantir likes to script and record everything they can, Alex Karp's segment, I'm guessing, was certainly recorded ahead of time. Props on him for not scripting everything, but it looks like Sham had everything pre-recorded and likely scripted, and so was the case with these Q&A for the retail investors. And then when they did have to take Q&A from the institutional investors, we'll get to that. They had some scripted segments that they used. I'm just guessing, but that's what it seemed like. So I don't understand. Why are they answering the question about the company targeting to be GAAP profitable with a concern of nuclear war? I just don't see the connection. I think I could make a connection, but I don't see it. And that lack of focus really concerns me. And they say the quality of our government revenue as viewed through growth, margin performance, durability, and resilience is unique to Palantir. I do agree with that. We think this uniqueness will be incredibly important in the quarters to come. Okay. So in terms of when the company will be profitable, which I think will be an enormous pivot point, very, very important for the stock, we don't get a full answer from that. We see the GAAP numbers are improving, but we're expecting margins to drop next quarter. Doesn't entirely make sense. I don't understand this answer fully, but we'll take it. Okay, here was my question about the SPAC program. I said, can you comment on the SPAC partnership strategy and its impact on the financials? So Kevin Kawasaki, head of global business development, answered this. He said, revenue from these contracts peaked in Q1 at 39 million, and they're going to wind this program down. They expect 30 million a quarter from these customers. Revenue in Q1 is the highest as a result of some catch-up, 9 million recognized in the quarter. They saw roughly a negative 2-cent impact on earnings. So there it is. That's why Palantir lost 2 cents. It's exactly because of the SPACs. Otherwise, they would have been right in line with the earnings per share. No doubt that once again had an impact on the public perception, Wall Street's expectations compared to what they actually delivered and what happened with the share price. So 2 quarters, unfortunately, we've seen a significant impact on the share price as a result of this. You'll see continued strength and growth in the U.S. business, SPACs growing at 65% year over year and 9% sequentially quarter over quarter. We had our strongest quarter for winning new commercial customers overall. Commercial customer count up 25% sequentially and 270% from a year ago. We expect continued growth in commercial customer acquisition and a path to double our U.S. commercial revenue again. That would be huge. Okay, and here's where we get to the institutional investors' questions. Now, these are very important because Palantir needs to be able to address whatever concerns these investors have. So he says, regarding the government business, can you talk to the acceleration that you're seeing in the business? And I think you called out the United States where you're seeing the reacceleration. Can you speak to the rest of the world and what you're seeing there? So this would be very important because we know that the government business is what's slowing down Palantir's government or growth as a whole, I should say. So if Palantir can get the government business going once again, that will drastically improve their overall growth. In Q2, we started to see the U.S. government business reaccelerate. We're doing a substantial amount of work right now where we are investing in our customers, and we expect that work to have both short-term but also long-term payouts. We're doing work now that matters and will likely be contracted, but we're also doing work that is defining the requirements for defense procurements over the decades to come. It seems like they are seeing the reacceleration, which is, of course, good. But that's the issue with some of these, is we don't get full answers. So here, Brad Zelnick talks about the range of upside that was in the Q2 guidance that we were talking about just previously. Kevin Kawasaki says, in the macro environment, we feel we're very well positioned for the full year and beyond. Our commercial business has outpaced the government business, accelerating in each of the last 5 quarters to 54% growth rate. And we've already seen some reacceleration in the U.S. government business, which we think is a long-term trend, and expect acceleration of overall government segment this quarter or shortly after. That would be huge. Very important that this happens. I don't think it's expected at this point now that we've seen such a deceleration. I definitely think an acceleration would positively impact the stock at this point. So here we are asking about, this is an RBC analyst asking about the range of outcomes in Q2. Sankar says the base case is really just establishing how we think about the visibility that we have. The upside is large. A lot of this comes down to the contract timing and acceleration of events. We aren't going to deprive you of our help in your greatest moments of need when you're at war because paperwork isn't in yet. Now, I totally get this. But at the same time, when you're halfway through the quarter, I feel like you should be able to predict to an accurate degree what the earnings, what the revenue, of course, you don't give earnings guidance in Palantir's case, but the revenue, I think you have a good idea. So don't say there's a bull case if there isn't one. And if there is one, start to factor it into your guidance because you know it's going to happen. Now, if you don't know it's going to happen, which it seems like in this case they are very unsure about their outcomes, then I would say they would likely lean towards being conservative, which is what I think we see here. They're giving us not the strongest guidance because it's only 25% year over year. And they're also saying, hey, it could be higher. So I think Palantir is once again trying to stick with its mantra of being conservative. And I do think we could beat this guidance considerably. So Shyam closes off talking about the geopolitical and macroeconomic situations. He says, our company was built for this. Our software was built for this. Back to work. Thought that was a rather strange way to end it, but we'll take it, right? We had both Karp and Sankar and David Glazer and Kevin Kawasaki I guess you could say all of them on this call. I say the actual earnings from Palantir, but I think this was a justified drop in terms of what numbers came out of it. And I think this really sets Palantir up as backwards as it sounds for a move higher, starting fresh, getting all of the Wall Street bets, retail sentiment traders out of the stock, and hopefully towards a much more healthy shareholder base. I don't think Palantir will be this low for long. That's just my opinion. Of course, it's macro driven. I do not believe Palantir would be under this listing price if it weren't for the macroeconomic conditions. I'm working on some price targets for Palantir and a full DCF model that you can find at palantirvision.com. Hope this was helpful. Until next time.